So, do you remember back a few years ago when many in the news media were saying that the Bitcoin exchange traded funds, or being able to exchange Bitcoin in exchange traded fund, was never going to happen? Well, they were almost right. Because with the anti-crypto Securities and Exchange Commission that we had in the previous administration, they had a big uphill battle for sure. They finally did get approved in January 2021 with that development. So when the Bitcoin ETF got approved, there's been a number of other things that have happened, especially now that Trump is back in office and him and the new Securities and Exchange Commission are kind of flipping the script with ETFs that we're going to talk about. And so there's this kind of crazy thing to talk about with those ETFs specifically, in that with the Bitcoin ETFs is that they broke some records when they were launched, right? They had some of the most successful ETF launches ever. And it's not just about Bitcoin ETFs either. Although that's what we're discussing right now. There's actually more of them that are in the works that are coming for the crypto market. And so we're going to talk about those. And not only that, we're going to also talk about which ones maybe to start looking at that might be good ideas for retirement portfolios. But we're also going to talk about something that I think is very important, is a comparison with what happened with the gold ETF when it was launched many years ago, and also what's happening with Bitcoin ETFs, and what I think is going to happen with some of these other ETFs, and why there's a similarity between them. So with that, let's jump over and talk about a couple things with these ETF launches that happened. Specifically talking about the BlackRock ETF that got launched with IBIT. So that was the one that I mentioned, record-breaking launch and very, very successful ETF because of the amount of inflows. I think it was like $37 billion came into that ETF, and so it's surpassed well-established ETFs like the QQQs, they're for the NASDAQ 100, and the SPY, the SPY as it's called, for the S&P 500. And those things had been in operation for a couple decades almost. You can also look at the gold ETF that was launched. We're going to talk about that one specifically. The gold ETF is kind of considered as the benchmark for a store of value of assets. And so in November 2024, the IBIT ETF from BlackRock had accumulated $33.2 billion. And comparing that to the gold fund, it was only 32, despite a 19-year head start. So it's a big deal to talk about what is going on with these ETFs and why these new ones that are coming on the market have a very high likelihood to cause the crypto assets that are in those ETFs to go up. And so we think there's going to be rapid growth. So I'm also going to talk about what I think are some implications for some of the crypto projects that are based on these ETFs. And like I said, we're going to look at the gold chart and how it compares. Before we do that, though, I want to take a couple minutes and go through some of the things that have happened from the Trump administration standpoint. You know, since Trump came in office of January 20, 2025, there's been really several significant developments related to cryptocurrency and the Securities and Exchange Commission, or the SEC. So I'm going to jump over and look at this slide that put together some major crypto developments. So number one, he created a new SEC crypto task force. Actually, Trump didn't create it. The SEC chair, Mark Urita, created it. And that task force was created the day after Trump came in office, focused on clarifying the regulatory framework around crypto assets. And so that was a big deal. And so then when you look at the next thing, it was Trump signs a pro-crypto executive order that essentially basically had him saying, hey, we're going to support crypto here in the United States. We're going to promote cryptocurrencies, and we're going to explore the creation of a digital asset reserve or stockpile. That got a lot of people's attention, and it really has got a lot of people excited in the crypto industry. Next thing that happened was the repeal of SAB 121. SAB 121 was Standards Accounting or Staff Accounting Bulletin, that got replaced with SAB 122. And the thing about that was that SAB 121, in summary, the big problem that a lot of people had with that was because if a regulated entity had crypto assets in custody, what they had to do was they had to put that on their balance sheet as a liability. And because it was a liability, we have to balance things out on the balance sheet. They had to offset that with assets. And so that created a huge problem with these custodial banks and things like that that wanted to custody crypto, because they had to have offsetting assets to offset the crypto that they were holding on their as a custodian. And so SAB 122 came along and said, from now the Trump administration, or the SEC technically, has passed past that, and it's a good thing for the banks and for crypto. And so that kind of goes into the next thing, right, is that the SEC clearing the way for banks to crypto custody. And so there's been other discussions along with that, but essentially they eliminated some accounting rules and effectively prevented banks from offering those crypto custody services. And so then another thing that happened was the creation of a working group by the administration. So a working group specifically around digital asset markets. And so that was people like David Sachs came on as the crypto and AI czar, and then you had the chairman of the CFTC and also the SEC all came together and said, hey, we're going to put together this working group and create this regulatory framework around what's going on with crypto and digital assets. And the great thing about that was, in government, some things can take a lot of time, but what they really said was, hey, we're going to have a 30-day, 60-day, and 180-day benchmark to be able to get some of this information out. So if something within 30 days, there was going to be a 60-day, and then there was going to be a 180-day for them to really come out and say, hey, here's the regulatory framework. So basically in 6 months, we're going to have an answer on what things should look like from a regulatory framework from the United States. So that was a big, big thing. And then the last one, is these pro-crypto appointments. So I talked about David Sachs being one, but he came out of PayPal and he was an executive there. And so he's the role of the AI and crypto czar, and so this is a positive development for crypto and what's going on there. So with that, let's also take a look at something else, and that is the White House embraces crypto as the SEC opens the door for banks. And so what that means is the door's open not only for what's going to proliferate, this crypto asset industry is going to proliferate, but also, hey, banks can be custodians now. And so they're talking about it in a very, very positive light. And when we look at it from our standpoint, the beauty is that when you as a crypto investor, the beauty is that this digital asset policy that's getting passed here in the United States is very, very beneficial to crypto assets, and not only crypto assets, but the ETFs that invest in those crypto assets and the actually entire industry, which I'm going to talk about that specifically in a moment. So one thing I thought was quite interesting out of this article, they do point out the fact that within 180 days, the working group must deliver 2 significant items, and that's a recommendations for a comprehensive federal regulatory framework governing digital assets and stablecoins, and an evaluation of creating a national digital asset stockpile. So that means within 6 months, we're going to get some pretty heavy information. And so this is a great article. I recommend you read it. It's on the National Law Review, and White House embraces crypto as SEC opens doors for banks. So now let's take a look at another piece of information that I talked about earlier. I alluded to the fact that we're going to take a look at the gold chart, and when the gold ETF was approved, and this is actually an older piece of information. You can see this was put out in 2018, and so why am I showing something that's 7 years old now? Well, it's because it has a great piece of information in it that when I was looking through some information the other day, I thought, man, this is something that we really need to discuss. And that is the fact that when the gold ETF was approved, and you see it in this little gold circle, you see the massive increase in the price of gold. And the creator of this, I have to give him props, right? He said Bitcoin has a much more limited supply than gold, and that's exactly what happened. So if we look at in comparison to today's Bitcoin price chart, you see that Bitcoin's trading at 95,880, and if I look at this, I go to max and look at the entire crypto price, we see that if I zoom in, if we look at all the way back into the end of 2023 and early 2024, this time period right here in late 2023 and early 2024 is when the crypto ETF, or the Bitcoin ETF specifically, they were talking about it at the end of 2023, and then it actually got approved in January 2024. And you see what happened was that, so looking at it from the standpoint of January of 2024, we see that when the Bitcoin ETF got approved, that you had an immediate price jump all the way from around 40K all the way up to almost 70K for the price of Bitcoin. And so that was a huge price appreciation, and in just a matter of a month and a half or 2 months. That's something we have to take a look at when we say, okay, the gold ETF got approved, we saw a huge jump in the price of gold. The Bitcoin ETF got approved, we saw a huge jump in the price of Bitcoin. So now Ethereum ETFs are coming on the market. That means we're expecting Ethereum price to really go up. That means the Ripple ETFs are getting ready to come on the market, Solana ETFs, Litecoin ETFs. And so the expectation is because when these ETFs get approved, it opens up much more liquidity from the market and allows more people to come in and invest from their investment portfolios and 401ks and investment accounts and all that, or retirement accounts, and allows liquidity to come in, and it allows the demand for those products to go up. And so I just wanted to point that out, that I think that's a great point. It's something we really need to think about, not only for our crypto investments, but for the ETFs that we're investing in as well. So on that note, when we look at the ETFs we're investing in, I wanted to go through this list of ETFs briefly that shows Bitcoin ETFs, blockchain ETFs that are out there that have been created. And of course, I said Bitcoin ETFs because that's the bulk of them right now. You can go through this list. You see the iShares Bitcoin, that's the one from BlackRock, and then you see there's a Fidelity one as well. You see that there's Grayscale and the others, and so the bulk of these are all Bitcoin related ETFs. And then you come down to Grayscale's Ethereum ETF that's out there. And then the interesting thing is that there are not only the Bitcoin and Ethereum, but then there's combinations of the two, as well as there's some unique ones that allow us to take advantage of not only the crypto assets themselves, but the crypto industry, or the industry that supports and benefits from the rise in value of crypto assets. And I have two of those pulled up. I want to show you a couple slides on those, or a couple web pages on those as well. So when we look at the VanEck Digital Transformation ETF, that's the DAPP ETF, and we look at the top 15 holdings, I want to discuss that for a minute. So you look at Coinbase, right? Coinbase is in that list. You see that MicroStrategy is in that list. You see that Riot Platforms, Core Scientific, Mara Holdings, those are all Bitcoin miners. And then also CleanSpark. I'm a fan of CleanSpark. Actually, know some folks there. I'm actually taking a tour of a CleanSpark mining facility here in a few days. It's super interesting on how those things work and what goes on inside of them. But for us as investors, even though I don't own part of that CleanSpark mining facility, I wish I did, I can buy this ETF that has CleanSpark and the other Bitcoin mining facilities in it, and actually own that in my portfolio. And so there's another one that's similar to this one. It's called the Amplified Transformational Data Sharing ETF, and this particular one there's a lot of overlap between the two, but there's also differences. And specifically, this one has Robinhood in it. This one has Coinbase, MicroStrategy, and it has Block. It has CleanSpark, as I mentioned earlier, and it also has this company that you've probably heard of before called IBM. IBM being maybe a surprise to you that IBM is in this ETF, but IBM is a big player in the blockchain industry. In fact, they were very instrumental in creating the R3 Corda blockchain that was back connecting up banks years ago. And so then they're also big in developing blockchain strategies and blockchain projects for companies. And so it's IBM being part of this, I think is very interesting. And so then these are good places probably to park some money in your retirement portfolios. So we want to make you guys aware of that and hope it's beneficial to you. Also want to say, if you could like the video and also subscribe to the channel, that would be a great benefit to us and help us to keep making these videos for you, and give us some feedback in the comments as well, so that way we know what you guys would like to see us talk about, and we'd really appreciate you subscribing and liking the videos. Also below the video, if you look down below, you'll see some links to some information and some educational content on there. You'll see that there's a link to be able to learn more about DeFi, and if you watch that, there's a 30-minute video you can go watch and learn about how to take advantage of investing in this market. So if you're new to the market, I highly recommend you take a look at it, because there's some great information there.